Hey, good morning, everybody. Welcome to Forex.Today. It is the 5th of June. Oh, folks, 5th of June, 2017. It's a Monday? Yeah, that's right. It's a Monday. It's a good time to get together as a group. 7:30 in the morning. Yo, 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 yo. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. How's the sound? It seems like Windows keeps adjusting my microphone. Sometimes it's fine, sometimes it ain't. You let me know. Site? Yeah. Hey Daniel, that legal stuff we talked about 6 months ago. I think we should start that process. So let me know the attorney's name. Thinking out loud. So let's talk a little bit later. Oh, it is very low. All right, so let's try this. Recording devices, properties, levels. Yeah, see, it is way low. Now, luckily, Windows automatically resets it every time. Thank you, Windows, for resetting it. Is that better? No change at all, huh? Yeah, better? There you go. Bigger voice. It's so much bigger. Thanks, Mickey. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Nice to meet you. See, the problem with being on a webcam every day is you get to watch yourself get older. Is that gray? Did I get a gray hair? It's like a little bit of gray. Yeah. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. And if we don't have the honor of working with you yet, please visit TradersWay.com and at least try our demo account. Give us an opportunity to earn your loyalty and respect. We'd like to be a business partner with you. I do these sessions 7:30 in the morning, Monday through Friday, here at Forex.Today. Except for the first Friday of the month, which was last Friday, I'm at Epic Street, where I'm formerly Speaker of the Year, formerly Best Forex Blog, formerly Best Educational Webinar, formerly Best Forex Special Event, and some other things. Silver Fox, I like that. A bit. There we are. All right, so, oh, you know what's not running? That's why. Hang on. I don't have my share screen. Then I gotta move this out of the way and click that button. That button's not there anymore. Where'd that button go? Hang on, I gotta do this the old way. Sorry. Almost there. Wait for it. All right, here we go. Screen area. Weird. Selected area is too small. Huh. It's having a heart attack. All right, something's bugging it out. Hang on. Now it's kind of frozen or something. See if I can get out of this. Sorry, I normally do this ahead of time. Maybe if I click exit, there we go. Exit, 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 exit. I'm actually taking 2, Joe. I gotta be careful. That's an insult in some countries, right? Taking 2 classes. Hang on, this stupid thing is frozen up. I can't get out of this. I'm frozen up. Hang on, the stupid software is messing up. Control-Alt-Delete. And quick meeting, editor, Skype. All right, let's try this one again. Hopefully this isn't a problem. Okay, share desktop, share your screen. This time I will select full screen. Okay, I'm just going to do full screen. Hopefully it works this time. Okay, I think that's working. Okay. Yeah, Joe, I think I can do it this way. Are we all good now? Cool. Hey, yeah, I'm taking two courses. One of them, right off the bat, I don't get because it's the philosophy of race and gender. So I asked my children, we were eating lunch together, and I said to my daughter, I said, hey, what's your philosophy as a girl? What's your philosophy of a white girl? Like, I don't get it. Like, do I have a philosophy of a white man? I wake up and do I change my philosophy over time? Do I live my philosophy properly? Do I express? I mean, I can't wait to see what someone's gender. What if you're in between genders, or you're not sure what your gender is, or you have a flexible gender? Does your philosophy change? Or as a flexible gender person, I think your philosophy is pretty much set, but your gender is a variable. So yeah, I'm gonna love this class. I'm gonna love it. Yeah, yeah. I would like an engineering class or financial engineering class. That would be great. Yeah. So can't wait. Can't wait, man. Can't wait. It is Harvard. It is a bit of a liberal school. All right. Check that out. This is the post-NFP trade. There were 2 trades. There's the little scalp, and then there's one that's supposed to move up and then range back. I'm surprised with such a disappointing number that that it didn't actually go higher. But that's That's the new NFP, isn't it? I mean, I'm telling you, there was a time when I traded NFP where it would move 300 pips up, then 400 pips down, and then 250 pips back up in an hour or two. You know, like what? Really? So you know, a 50 pip pop and stop is not, you know, it's underwhelming, right? So what do you want to do with it, bro? So if you're a swing trader, you already shorted it, um, you know, more than 12 hours ago. So you're already done for the week. Oh yeah. On that note, I am going to start the scalping course today. Now it's going to be tricky. I was thinking about it because you can't really record in some of those situations. I mean, scalping, different types of scalping styles or strategies occur at different times, and many of them are fairly rare. I mean, they happen, but you know, it's sort of like walking through the woods with the intention of photographing an owl. You know, you're like, are you going to see an owl today? Is it going to be within line of sight? Is the lighting going to be proper? I mean, you just, you know. So I'll do what I can, of course. But anyways, I'm going to start that process today. Just update you on that. Here's oil. It went down to 47. If you remember, around 48, we're like, hey, man, it doesn't have to go any lower. Okay. There is another hardcore support down in here. But if you're a bull, 47 and a half and 46 and a half are, right, are areas of opportunity. AO. Roger that. WTI crude in your AO. Okay, this is our CAD. I think the watermark maybe needs to be a little darker, huh? It's all right. Oh, when you do it this way, it lets you actually pick a color. When I set it up, it wouldn't do it. I kind of like silver. Where's silver on this thing? Light gray. Let's try light gray. Yeah, that's enough. Well, Joe, talking about oil, and this was what I've been saying the last week or so, that, you know, we talked it down, we've talked it up, you know, and then we've talked it down again. But at some point in the near future, I wouldn't be surprised if we find a bottom. And could it be 44 again? Yeah, it could. And this week, I find it interesting that, you know, 44.66 as well as 44.44 are potentially a bottom. So it could, But this area here, which I marked a week ago, is also an interesting place. So I'm thinking, 46.50, and then down here, right? So 46.44 or 44.44. How about 45? Well, maybe. So I'm looking for support. Now, weekly swing could take it up here at 47.5. But that would be less exciting. But it could. I mean, you could inverse head and shoulders this thing and take this low now. Okay, if you can see, there's a swing low here, which could work. And if it does, then it would be interesting. But I'd rather look for a more proper reversal pattern, and that's a monthly trade off the monthly M2. Okay. So anyways, so play the CAD appropriately. Yeah. All right. So back a while ago, last week, I suppose, I think it was the morning before, it was the morning of the 31st, right? And some people were shorting. And I said, it's not a bad idea. You're just too early. Nobody's standing in line at Western Union 12 hours before they get paid. So it's the right strategy. You're looking for resistance. You're looking for peso strength, but they're early, just not on a chart basis, but on a human basis, right? Does everyone remember that? If so, say aye. So this is, okay, a first move here, and so on and so forth. But peso, right? Peso trying to get involved. And now it's how to move. You see, it ain't perfect, okay? And you got to be careful, because if you did take it, or if you took it and stayed in, sort of thing, because you may not have, but you need to recognize that this is an area of concern on a weekly basis. Okay. So it makes me think, like, on the 31st, and then the 1st, and then the Friday. Remember I said it could go all the way to Friday, because some people get paid on Fridays at the end of the week. Some people get paid on the 1st of the month. Some people get paid on the 31st of the month, right? And it looks like all those checks were gathered up until then. Some people did it again on Saturday. Went to Western Union, said send some money home. And when did Western Union send the money home? When banks opened on London morning, right? Right, look at the timing, right? London open. When, right? When did they? So you can see they're gathering the money, they're gathering the money, they're gathering the money, they're gathering the money, they're gathering the money. 2.36 billion. Switching, right? So, but it's pretty cool talking about it on Tuesday or Wednesday, huh? Or even non-farm payrolls, I think I talked about it too, didn't I? Get ready for the Mexican peso strength. But so anyways, very nice, very nice. How about the piggy? Little piggy. Doesn't look amazing to me. I think I'd like to find something better to trade. Euro Aussie? Yeah, that probably makes sense. I covered that on Friday, where Aussie and Kiwi, based on a relative strength exercise, were much stronger than other currencies. I'm going to that now. Okay. But are we closer to a buy zone or a sell zone? Yeah. So you don't want to be like last one on the blue train, right? Now, somewhere in here, we saw New Zealand dollar falling. I think it was this down period. Is it that long ago? It must have been. Maybe it was this one. But the New Zealand dollar was one of the weakest currencies. It was falling precipitously against the yen and the dollar. Didn't we talk about it being wrong? Like the market was actually wrong on this? That it was mispriced? And I gave a logical reason why I said everybody in the entire market is wrong. That's pretty arrogant. Yeah, that's pretty arrogant. You better know what the hell you're doing if you're going to be that arrogant, huh? What kind of idiot would say something like that? Like, oh yeah, the entire market's wrong. Let me tell you what's right. Michael says, what does it mean for it to be wrong or correct? Well, you need to wait. And if it's falling, so I believe what I was saying, and maybe it's this entry here, um, that it's falling and the market's wrong, it should be going up. So you should look for key reversal areas with key reversal patterns and be ready to take it in the right direction and hang on to it. More importantly, you wouldn't scalp up if you thought the entire market was preparing to reverse. So the fundamentals said this should go up, and yet this was falling. So, right? Also, remember, and the scalp traders know this. Okay, this is a sell. This is a very, very obvious sell, and this is exactly where they should take profit. And they knew it on Monday that that's where they were going to get out. Just it's fact. To me, it's factual. It's not even opinion. If you're a bear, you sell there and you take your profit there. That's it. Done. Nothing more to discuss. And so at this point, you can see the market reversed at the area where all bears exited, which would be a good place to go long, right? So, so how many people are thinking about doing the summer school idea if I go through all this? Because I'm hiring programmers and backing up the database and updating things to make sure it works well and that you have opportunity to talk to the other students. But, so we're talking like, there's going to be some money involved. You're going to have to work, I don't know, 30 hours of study. I mean, are you prepared to do that kind of stuff? Yeah. Yeah, well, I think the way, it'll be is I'll do a course on scalping. You can sign up and pay for that. Or I'll bundle everything. Fundamentals, swing trading, scalping, and there'll be another one on price action and another one on technical analysis in general. Bundle them all together and give it at like a ridiculous discount so that you have something to do the 3 weeks I'm not around. So I just have to apologize since I'll be living on campus. So I'm thinking about launching it like Wednesday of next week, sooner if I can. Because I don't want to be on campus and all of a sudden I get 27 emails of people who are like, I can't log in. I can't do it. So I thought I'd do that first. Yeah, you know, Zeal, I will try to maybe give you guys a tour of Harvard, something like that. Right, again, so like here's my dining hall. Oops. Right, cool, right? Yeah, it's called Annenberg Hall. And one of my classes is in one of the most famous and historic Harvard buildings, although it's modern for Harvard standards. I think it was built in the mid 1800s, which for Harvard is like hundreds of years newer than some of the other buildings that they still use. Yeah, so I'll take you guys. I'll do something cool. I'm going to be living like a 19-year-old pimply faced college kid, probably at bunk beds. Yeah. Well, we'll have to do a panty raid over at the Radcliffe campus. Harvard bought Radcliffe, which is it used to be a very sophisticated and elite women's college. It's just like up the road. They now even some of my classes have we're in Radcliffe classrooms. So Rob is looking at it. Oh man, so yeah, those are yeah. Oh, I don't know. Actually, Rob, I don't know. All right, on with it. Yeah. All right, so Kiwi, USD yen, and then we'll go through the calendar and stuff. Here's the most, I don't know, like 37 Nobel laureates, 7 presidents of the United States, many, many, many heads of state from around the world, from other countries. Um, Bill Gates, Zuckerberg, you know, you know, yeah, I don't know. Who went to Harvard? I don't know, nobody. Obama, didn't Obama? Didn't he go to Harvard Law School? Yeah. It's yeah, it's only the best school in the entire world, but all right. So yeah, let's get into this USD yen. This is a canary in the coal mine, right? Ben Bernanke didn't go to Harvard. He's a Princeton guy. Gee whiz, Henley. Henley, thank you for that really nice email you sent me too, by the way. Thank you for letting me in your life. Okay. Yeah, so this is a bellwether. This tells you what's sort of going on in the world. You know, yen is a powerful currency in the world. US dollar is a powerful currency in the world, right? And right now they're both moving sideways. Okay. Now, yen has been winning the battle a little bit. You see these squiggly lines I put onto the chart? Now, last week we went through, I showed you how to install indicators. Okay. So I went to I went down to code base, right? And we just went randomly through hundreds of these, and I picked a few. A couple of them didn't work. Some of them worked, but I didn't like them, and I deleted them. Okay, we did this together. Oops, come on now. So anyways, one of the things I downloaded with you guys is the dollar index, named Index. It was a well-named marketing genius. Okay. So anyways, you see, this is the US dollar versus everything. So right now, US dollar is weak. And you can see relative to the yen is stronger. Right now is in a neutral zone. Okay. But could you trade the breakout here? You could if you want to be a bear. The way that you do this, there are multiple ways, of course. If you're using moving averages, you sell off the 21. You should know that. That's elementary. Okay. Okay. The next opportunity is you sell it off the swing zone. Okay. A different opportunity, you'd sell it off the Stokes cycle. Another opportunity, I suppose you would fib it, but I wouldn't fib it here because it's not technically trending yet. I would call this a range. Okay. And of course, the other way you could do it if you wanted to be a bear on this is sell it at the top. So if you're a bear, those are three things you can do. And normally I wouldn't recommend taking these aggressive ones, except it's, ex ante this move. And this is not the same as this. It's not the same as this. It's not the same as this. That's not farm payrolls, which means this next move isn't necessarily related to these other moves. So even though we've been in a range, this isn't necessarily part of that range. It might be part of the initiative to create the breakout. Okay. Henley, you said Harvard gets a B by Google because Zuckerberg went there and because Bill Gates went there. Yeah. Well, how about this? Many of you guys are from other places besides the United States. If I said I went to Johns Hopkins or I went to Cornell University, right? Do you know those universities? Cash knows Hopkins, Cornell. But like, you know where it fits, like which one's better? Heard of them. Right? No, don't. Right? No, don't know the rating. But if I said Harvard, it means something to you, doesn't it? Like, not only have you heard it, you just know it's like one of the best, if not the best. You're like, I don't know it, but I know it's awesome, right? Or do I have that wrong? That's just my interpretation. But it's even not just, like, there are lots of, Dartmouth is Ivy League. Do you know anything about Dartmouth? I bet you don't. Right? You're like, Dartmouth. So it's not just Ivy League. It's like the Ivy League, right? It starts with Harvard, and then you're like, well, there's Yale in there, and I guess Princeton, and then you go, well, is Columbia an Ivy League school? Yeah, maybe. And Penn? Is Penn an Ivy League? And all of a sudden you're like scratching. Well, Stanford's good. That's on the West Coast. That's not right. And all of a sudden, you're really scratching your brain, right? And you're like, well, but so, anyways, I don't know why we're talking about this, but anyways, but thanks for yeah. I'll bring you on the journey if you want me to. I'll do my best to. We'll do a webinar or walk around, or maybe I'll just record a YouTube video on my phone or something. I don't know. All right. So, anyways, if you're going to play it down, those are the three ways I would suggest. And if you think it's all, you know, this post news event is done, and that people are overreacting to the news, which wouldn't be the first time, and you'd rather take it north, then you need to play the range, which would mean you'd need to wait for this to be oversold and then turn north. So maybe the next 5A cross up, but you're trading centripetally against the natural forces of the market, which technically are still down. If you don't know what I'm talking about, you didn't read my book, which is fine. You know, I think I make $5 if you buy my book. Okay. Or the training course, which I'll put on the website because it's in there, so whatever. And if you still don't know, you should ask me. But these are things that I just assume you know. So if you're going to be a bear, there's the first op, there's the second op, there's the third op. Decide what you want to be and go for it. Okay. On the smaller time frame, you could see that a few minutes ago was a great opportunity. Okay. Oh, Ryan, there will be a rate hike. That's not June is not a discussion. What the discussion in the market is, Ryan, is SEP or SEP or Ds. The way I think is it'll be like June Ds. What we're discussing is SEP. And those, by the way, I'm talking about futures contracts. Those are so it's the September Fed meeting. That's what we're discussing. But June's done deal. Done. Oh, will it double bottom at 108? Well, let's take a look. Let me zoom in back into that. Okay, you said 108, huh? Let's go to like a 4-hour. 108? You know, there's so many other things going on besides 108. You know, right now I'd be more interested in like what will happen at 109.50, probably a bounce. And then next week we might short it to 108.50. But 108? Yeah, I like big numbers on yens. So I would say probably down to like I said, 109.50, maybe 109 this week, if it's going to head down. Then next week there'll need to be a false rally into a swing zone in which we would short for a target of 108.50, 108. But the aggressive target for the month of June is 107.65 and a quarter of a pip. So 108, irrelevant, unless you're playing that, right? So, yeah. Okay. So how about this? Another way of looking at it is if you're going to trade it technically, until it breaks high above this area, you're a bear. If it breaks up here, then you're going to buy it up. Okay. Since it's not doing that, right? If you're not going to be a bull, I should say, right? If you don't, right? If it hasn't made a higher high, you can assume it's going to make lower lows, and then you know where's the next major level of support, right? So you're like 108, yeah, but the pivots suggest it's not a straight shot. Now, can anyone confirm that while this was heading up, we talked about, even though this is up hundreds and hundreds and hundreds of pips, that it probably won't last? That in years past it's come all the way back down. Don't be shocked if we're back at this bottom, that this huge rally is gone, that you should take your profit. If you're up 300 pips, take your profit and run. Is any of that true? That this isn't the one you hang on to for the end of the year? It's nice to know these things in advance, isn't it? Yeah, well, what it could, like for example, yeah, not the right type of year, right? So yeah. But you hear a lot of hope when you see the market like this. There's a lot of people out there with hope, right? Like they're gonna make 1,000 pips on this one. I'm like, no, you're not. No, you're not. Absolutely not. Take your profit. If you're up 300 pips, take your profit. Try again, but it's gonna come back, right? But my next thought is, let's say it does make it back down, because this is the bearish target. So why not have it go down to 107.50 or 108, 108.50, whatever, right? Then my guess is, it'll move sideways from 107 to 110 until August. What do you think? It's nice to know in advance, right? It's better than trading blind, I would say. Gold is now 182, up about $65 from our bottom. And remember, at the time it was falling, so we were at like 1230, 1240, 1250, I can't remember. We said 1217 would be the bottom. Actually, we started way up here, didn't we? Forgot about that. Wow. But we had it coming down. Then we had it coming down to 1217. 1217 should be the low of May, which it was. And now we're up 65 bucks from there. Did anybody trade this? I advise somebody buying, well, let's say more than a metric ton of physical gold. I said, it'll fall down to 1217, but that'll be the low of May. What's $65 an ounce times a metric ton? That's a lot of ounces, Bubba. So someone would draw a trend line here. I can sense it. There's our quick trip around the world. That's how you got in, Dom? Congratulations. Is this where you send me cigars? Yeah, you just go to jrcigar.com and buy me a virtual gift card. Put in my email address, and I buy myself a beautiful cigar. So I am now going to go to, I was going to try to make this cool. It's slow as molasses. Clever. What a clever way. All right, so here I am, Forex.Today. Again. What a beautiful login screen, huh? Who logs in like this? Like, seriously. What a beautiful login screen. It's ridiculous. Oh, wow, look at that. What happened to the webinar? Wow, weird. Page 2. There it is, finally. Can everybody see Forex.Today properly? You're saying Ben Bernanke he's a Harvard boy? Is that true? Gee whiz. All right, well, thank you for answering this part. Some great posts here. So to give you an idea, you know, since Friday, there seems to be 25 or 30 different trading ideas, technically and fundamentally. So thank you very much, guys. Namaste for all the hard work that you've put in. Now, hopefully you're giving each other feedback. I'm seeing more, you know, some likes. Daniel got 6 likes. Daniel's got beautiful charts, huh? Yeah, see, I like how it's clear. Looking for a bullish opportunity off of that. Yeah, I can see that. It's more of a range play, right? So the way I look at it is, you know, kind of like if you're going to go there, right, that was supposed to be black, but let me do it again, right? Which to me smells like range, right? So if you get what you're looking for, and you probably will, right? You get the up, the down, the up. I'd almost think, you know, back around, back down to that. This is USDN daily? Yeah. Okay, cool. Yeah, gorgeous. Gorgeous. Cool. All right, so anyways, I wanted to go to news. Let's do the calendar, as they say in France. The calendar. You are not alone. RBA. Whoop, 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 whoop. RBA. So, what's your alpha, baby? You need to decide whether you're going to raise interest rates or not. And if so, or if not, also, what is the statement going to say? Hawkish or dovish, bullish or bearish? Angels or demons? On hold, sure, but what are they going to say? On hold next meeting? Is there an upside? Is there a probable? Right? So this is where you would look at their import-export data. How's their trade balance going? Are things improving? Okay? Well, GDP is one thing. And then a trade balance, right, is going to be, I think, more important on the short term. Is there growth in exports, so on and so forth? Okay. Also, just for fun, Ryan, to continue the thought, bust out some iron ore and coal prices and look at the trend there. And if the trend is improving, somebody's going to benefit. Who would benefit? I don't know. Those countries exporting iron ore and coal. Well, that would show up in the trade balance, but not only just today's trade balance, or really last quarter's trade balance, or last month's trade balance, or last year's trade balance. What about next month's trade balance, next quarter's trade balance, next year's trade balance? And is there seasonality that you can see in the technical charts in regards to supply and demand, and of which is derived price for iron ore and coal? Oh yeah, and don't forget Baltic Dry Index. How do you ship iron ore to China from Australia? Yeah. Are you doing the railroad stuff now? Yeah, that's coming out. It's Wednesday, isn't it? Might be tomorrow. Yeah. Well, yeah, by ship, but by dry bulk ship, right? Not by tanker, for example. And that's tracked by the Baltic Dry Index. So, for example, let's try this one. Dry Ships Inc. Seems interesting. Yeah, that's all right. Okay. May last year, May this year. It spiked up until December and then came back down, huh? Now, traditionally, I use this one, but it's a frustrating chart. But you can go to the advanced one and then change time frames and stuff. Okay, so there's the year, huh? Smells like a 786 to me, right? But anyways, so you'd look at this, and this is, just so you guys know, because I'm going to assume now some people don't know what this is. This is the cost of moving something like iron ore and coal. And it's influenced primarily by supply and demand of the type of ship. Think of like a big hopper car on a railroad, on a train, right? The stuff that would carry dirt, right? Coal, a hopper car, right? Not an oil tanker, not a box car that holds, livestock. No, a hopper car. Well, take a hopper car now and put it on the ocean. That's what we're tracking. That type of ship. Okay? Bulk dry goods. So, if China wants to make steel, and they don't have enough iron ore and coal because those are the two main ingredients to make steel, they got to go somewhere else and buy it. Australia's right next door. Or if China needs coal for their coal-fired power plants, but they don't want to use their coal because they have dirty coal, it's nasty, dirty coal, they would rather buy clean coal. Australia has the cleanest coal in the world. It's beautiful coal. It's like golden coal. So, so let's say they want to buy some of that. Great. They need to import it. Great. They're going to need Aussie dollars. So because Australia is not going to take yuan or renminbi, right? So they need Australian dollars. Demand for the Australian dollar goes up. Price goes up. Then they buy the coal or the iron ore or whatever. Now they need to haul it back to China. You can't use a train. Plane wouldn't be very efficient, right? So you're probably going to need a boat, a particular type of boat. Well, there's only so many boats that can do that. So if there are lots of boats available, they're going to, by basis of competition, or if you just look at supply and demand curves will tell you price will be low. Now, if lots of different organizations or countries or businesses or whatever are trying to buy iron ore and coal, it doesn't even have to be from Australia, it can just be anywhere, then those ships are just not available. So if there's a lacking of ships or a high demand, whatever, then prices will rise. This is an index of those prices. Neato, right? So this could be representative of at least some part of global macroeconomics. So, for example, when the economy is good, you need to build new skyscrapers, you need to build new bridges, you need to build new factories, you need to build new cars, you need to build new stuff, right? You understand? If the economy is expanding, like quite literally expanding, you need new things. And if you're going to make steel out of it, for example, then this should, you'd think, go up. Okay, now it depends where you get it. But you know, what else do you need? You need more of everything if the economy is expanding, right? You need more gold and copper to make electronics, for example. And just more and more and more and more, right? So you could take this all the way through and say, well, if you track the price of Bordeaux futures, it may be an indicator of the economy. Sort of like the lipstick index, right? The sales statistics for lipstick can be an indicator. Another indicator is the length of women's skirts. Long skirts usually mean a recession. Short skirts, hey, everybody's happy. Oh yeah, absolutely. Yeah, no, these are real things, right? I'm not even making it up. So anyways, and of course you guys know the one about suet prices, right? Ryan says, where can I read more about this? I don't know. I have no idea. I have no idea. You guys know the one about suet prices? I read about a guy, his alpha, the way he made money was to be smarter than everybody else. So most people would trade based on retail sales data. new order data, right? Because that stuff comes out, right? Inventory levels, new orders, retail sales, right? So that's what most people do, analysts, right? They're like, wow, retail sales are up. But isn't that after the fact? What's before retail sales? Inventories. Are they building up inventories or drawing down inventories? And what's before that? New orders that have been already ordered and recorded. And now you've been updated that last month there was an increase in orders. So this guy realized, I need to be before retail sales. I need to invest before inventory. I need to invest before new orders. So he started to track on his own, because there wasn't like futures data on this. He used to track prices in suet. Suet is essentially rendered fat. Now your grandma might have a suet bird feeder, but suet is the #1 ingredient in making soap. And I'm not talking about the stuff for your hands, really. I mean, sure. But he tracked the supply and demand and the price, more particular, of suet used to make industrial soap. Things for like cleaning factories. And based on these prices, he could assume demand. So if prices are going up in suet, factories are being retooled. Well, why are they being retooled? Because their clients are calling up. They haven't placed an order yet, but telling them that they're going to place new orders, that they need more capacity at the factory to get things ready. Things are doing good. We think, you know, the next 6 months, we want to like increase orders by 30%. Can you get the factory ready? And so the factory starts cleaning the factory, maybe ordering new tools and all that kind of stuff and getting ready. So he would do that. So he would invest at that point. 6 months later, new orders would be reported. 3 months after that, inventory levels would go up. After that, retail sales would go up. And he'd already be in 9 months before everybody else. Cool, huh? So anyways, you can use Baltic Dry Index. Right now, you can see since April, demand for iron ore and coal has been down. Kind of looks like this, doesn't it? So what happens when they run out? What happens when they run low in supply? Because you might look at this and say, oh, wow, this tells me it's the end of the world. The global economy is crashing. Well, that might not be true, right? It's like going to a big box store like Walmart or Price Club or whatever, and you're like, yeah, I'm going to buy 30 pounds of breakfast cereal and 400 rolls of toilet paper. So this doesn't mean you stop pooping in the morning. It just means you have a lot of toilet paper and you don't need any more. Right? This is where, a lot of people they don't understand how to read their indicators. But, a lot of people would say, well, my research has told me that people poop less than they used to. Based on what? Oh, well, I'm looking at the supply and demand of toilet paper, and people poop 40% less than they used to. And I think by the end of, 3 years from now, people will stop pooping altogether. But this, and you're like, that's stupid. But I hear people on TV all the time, like, that's what it shows me. This look at I got the chart. Look at the chart. This is what my research tells me. And I'm like, wow, these guys are nuts. Okay, so be careful what you're reading. So anyways, this would be interesting. If you don't believe macroeconomics is slowing down, if you think it's improving, then what you might want to say is, wow, there may be a need. So let's say, when do they start making toys in Christmas? Oh, snap. See, now that's a better question, right? When are they going to start making toys for Christmas? And maybe it's soon. I mean, some stuff have already started, right? But anyways, you know, if they're going to, let's say there's going to be an increased demand in September, October, November, and December because of an increase in just economic activity, not just Christmas shopping, but in the summer things are low, right? Unless you're hotels or water parks or something, right? But so now might be a better time to start building up stockpiles of raw material so that in September or October the factory can just fire up, right? So anyways, it'd be interesting to see what this means and to look. But you might say this is the value of the Aussie dollar. I wouldn't go that far, but it would be something, because if we just said this is demand for iron ore and coal, okay? So what happened, let's say February to April on the Aussie dollar, maybe? Would that be fair, or Aussie yen? Let's do it like Aussie yen. So this correlation looks like it might be bad. So this is Aussie. We said, that's interesting. We said February to April, Aussie's down. That's not what we had over here, right? February. See, I would have assumed the Aussie dollar would be going up. So you might want to look at this. Maybe there's an inverse correlation. Maybe there's no correlation. So this went from Dece to Mar, Dece to February. Dece to February, it came down. Dece. Down means up and up means down. I don't know. Pay attention. There might be other things going on. You might want to look at then if the correlation's broken down, because they might not be buying Australian iron ore and coal, whoever's buying those ships, right, or renting those ships. So what else is going on? You might want to say, well, what would explain Australian dollar strength, then consolidation, and then Australian dollar weakness? You might want to look at import-export data. Does that seem to fit? What does? Is this, we know this is the Trump election. Is this more impacted by yen than dollar? So you might want to look at Aussie dollar instead. Let's try that. Maybe there's a better correlation there to fit your assumptions. Sure, you might be backfitting a little bit, but yeah. Oh, see, that's better, isn't it? Look, okay. So we said from Dece to April, Baltic Dry Index was up. There we go. Okay, and then from April to now, it's been down. There you go. So it almost looks like an Aussie dollar chart, doesn't it? Oh, where did we go? This is what I wanted. See, this is So I don't know. Something to pay attention to. Oh, let's go back. Wow, we were doing calendar. I don't even know where it is. Must be on this. Yeah. Wow. All right. So anyways, RBA. Look, it's only going to take us the rest of the day to get through this. So RBA, what are they going to say? Write about it. This is, right? This is a while off, guys. This is tomorrow night. What are they going to say and why? What's your alpha, baby? European GDP. I think people are buying Europe right now because it's cheap. And that it's not as bad as it used to be. Probably won't be any worse. Do we actually care what the GDP is? I mean, put that in your pipe and smoke it, huh? What's important here as a currency trader? People make a lot of big stink about this economic releases, right? About the economic releases. And then they say, oh, well, GDP tells me this and NFP tells me that. But don't you see that, like, it's not that it's not important, it's that there's another level of thought. That this doesn't mean this and that doesn't mean that. It's what is the investment decision around that? Right? Right now, the euro's ripper strong. Is that because of the European GDP numbers? People are like, oh, damn, look at the European GDP. So there's another level. You see what I mean? What's going on there? Well, you have to ask yourself as a currency trader, because you're not an analyst. Remember, analysts are telling you this nonsense. Okay? It's not the upcoming interest rate decision. It's, right? There's something more. An analyst would say that, right? So as an investor, what are you doing? You're trying to make money. So what's cheap? What's paying you high interest? That kind of stuff, right? How can you control your downside and make a lot of money? Well, the United States is way over, right? If you've been investing in the U.S. stock market for the last 5 or 6 years, do you need more? No. So now you're like, where can I go now? Oh, let's go to Europe. Let's go to Asia. Let's let's start buying up in Indonesia. Let's start buying up Malaysia. Let's get into some China, right? Give me some India. Give me some Europe, man. I want to buy some real estate in London cheap. And I want to buy some German companies. And maybe I'll throw some money into some Italian companies, right? Just if I can get them for 80 cents on the, or 10 cents on the dollar, 20 cents on the dollar, yeah, I'll throw some there because I'm fully booked in America. What am I going to do with the rest of the money? And by the way, if your portfolio is up 40 or 50 or 60% over the last 5 years, now you start cashing out of that, and now you got some dry powder, and then you're like, well, what am I going to do? Plow it back into to Amazon at $1,000 a share? Like, where were you at $400 a share, right? So now, if you're taking some off the top, which is called rebalancing, then what do? Well, you don't want to just buy something else. Everything's overbought. So you go, now what do you do with your money? And that's more important, isn't it? It's like when someone buys steel or orders steel, somebody orders iron ore and coal. And when someone orders iron ore and coal, someone orders a ship to carry it. And when someone orders a ship or actually pays for that coal, they need Australian dollars. And so on and so forth. And everything is what moves currencies is business decisions. Euro is going up because the euro economy is cheap. There was a time when the euro economy was pathetic and the euro was way up too. I went over that in non-farm payrolls. So how could you have a strong currency in a pathetic economy that is literally on the brink of failure? Why would the currency be so strong? Because their central bank guaranteed 20% bonds. Oh my God, you just guaranteed me? You guaranteed my money if I invested into Greece, and Greece is going to be paying me 20% a year? Oh my God, right? And now the euro's strong. Why? Because money is pouring into Europe, right? That, my friend, is why it's strong. But if you looked at the data, you're like, Spain's going to default. Ireland's going to default. Portugal's going to default. Greece is going to default. I need to buy as much euro as I possibly can. Because the ECB's backing it up, I'm going to make a lot of money. I don't give two hoots about German GDP being a negative number. Who cares? I'm going to make money. And that's what happens. So literally, think of it that way. The economic data was absolutely pathetic, pointed to the end of the Eurozone. Very, very possible end of the Eurozone. Greece did really kind of default. Portugal was very close to defaulting. Spain was really thinking about it, right? So you would say, based on what the analysis tells me, is the euro would be pathetic. It'd be euro is, remember how they're talking about parity and below parity and all that kind of stuff, right? Remember all that? So then why was the euro at 140, 150 against the dollar? Money. So I want you to think smart. There's a reason analysts make, $30,000 a year, and traders make $30,000 a month. There's a reason for it. Alpha. It'll get you there, baby. Okay? Needs to be interest rate decision. Woo! But what they say there is going to be important. Okay? And then don't forget the. Let's throw in, let's change this. Let's just look at the medium stuff. Okay, productivity. We have ISM services coming up right here. That's going to be important, obviously. It's not going to be important for your NFP model, but it might lead towards like wages, wage growth. Is the trend slowing down there? See, that would be bad, right? Canadian IVPMI, that's a good one tomorrow for CAD. That's a good trade, right? Good trade. Aussie GDP, another great scalp. Export data out of Australia, import data out of Australia. Didn't we just talk about that? Too bad it's after, right? It's after the RBA decision. But what was last month? And then this month you should say, oh man, I can't go to bed yet. I have to stay up a little later than normal because I got to get my import-export data for Australia. And you just can't wait. I won't be able to sleep until I get that data. Because I'm thinking about cornering the market on the Aussie dollar. I think maybe by September, October, I'd like $1 billion Aussie dollar. And every one of those trades, I have a stop at break even. Think of it. So at the end of the year, right, if you had 10 Aussie dollar trades open, that, with the standard lot, that's $1 million. You could have millions of dollars in Aussie. As long as you're profitable on every trade and you did every trade one at a time, you moved your stop to break even. Yeah, the UK election. Yeah, that's gonna be a big stink. I don't know what to make of it. It's like Theresa May is going to win again, but now it's going to be different. Well, how much of a majority? But so, and Dre says, think so? Well, the person she's running against is an idiot. But other than that, I don't know anything about UK politics. So if she doesn't, oh my God, I mean, yeah, then that could be just horrifically bad. So But as a trader, what do you say? But do you trade before or after? Look, if you want to be involved in that, then be there as it happens. Okay? Okay. Import-export trade data out of China. Do you think that might be important? How about inflation data out of China? Do you think that might be important? How about housing data out of Australia? You think that's important? See, the biggest concern is the slow economy in Australia, but the housing bubble, if you want to call it that. And that was a concern 2 years ago. So, if you're really an Aussie dollar lover, you might want to pay attention. It may not move the market instantly, but it'll be interesting alpha. For me, I'll just read about it the next day. Import-export out of Germany, that's important. Simply because Germany is one of the largest exporters in the world, and they're also the largest economy in the Eurozone. So I care about that more than I care about Eurozone PMI. Who cares? Okay. And of course, all UK stuff will be overshadowed by the election. Okay. And that's it. So I'll see you guys tomorrow. Thank you for being a part of my life. Thank you for being on my team every day. Thank you for the loyalty and respect you show me every day. I appreciate the hard work that you do. And I hope you have an account at TradersWay. If you don't, I hope you visit TradersWay and open an account. And lastly, I hope to see you again tomorrow. So peace on earth. May the pips be with you. May your profits be above average. Do I have 5 minutes for a quick chat? Maybe. Not really, but maybe. Yeah. Yeah. Okay. Only for you, Ryan. Cheers. And Daniel, you and I need to chat too. So, anyways, cheers.